And welcome back to Bitcoin Advisors channel. Wishing you guys a blessed and highly favored start to your day. And yes, I'm very, very excited to bring you this video as Bitcoin is doing something, well, we haven't seen for a very, very long time. And I'm going to go ahead and remind you, smash the dang like button. Herp the derp, smash it again. And look, if you think forcing people to wear a face mask, you think forcing people to get a vaccine should be a straight up crime, well then smash it again. I'm so sick of wearing face masks. I hope you guys all agree. And if you don't, go ahead and dislike the video. I don't care. Bitcoin, represents freedom from the crooked bankers and politicians. So it feels so good to say and let your voice be heard. I'm going to go ahead and jump into what we really came here for, and that's Bitcoin's price action. So first thing is first, I want to take a look at some of our underlying market dynamics. Starting off, and by the way, we're launching a new version of the Bitcoin Advisors website, hopefully by the end of this week. Additionally, the mobile app will be updated by the end of the month, so you'll be getting all this fun data, this quant data in the mobile app and in the website. And what does open interest represent? Again, that represents all the leveraged positions on the board. Yet again, this is one of the key reasons I was saying Bitcoin very likely gives a try higher before we take a major leg down. And, again, there is a potential at the end of this month, Bitcoin will present a massive downside move. But right now, this is exactly what you want to be seeing. Open interest is going up alongside Bitcoin's price going up. And we did take a massive leg up in open interest over the last 48 hours from about 10.2 billion to 11.7 billion. So over $1.5 billion of leveraged positions were added to the board over the weekend. And that is significant. And this move I want to keep an eye on, because if open interest gets above 13 to 14 billion, right, this region right here, and Bitcoin puts in some kind of a lower high here, right at 44,000, where we're currently at almost right now, then very, very likely I'd be looking for a 25 to 50% move to the downside. So that is something to be aware of. It's just a potential for right now. And I would say, again, as I said over the weekend, the path of least resistance right now is to the upside. Also, want to check in on our fear and greed index, something we've been talking about over the past, months and months and months and months. We've been talking about this. So coming in at a 45, that's still considered the fearful zone. And we did say, look, when Bitcoin first corrected down here in November 6th, we wanted to be in the fearful zone for some time to kind of scare everybody out of the market, right? And for a reset to happen. And exactly 2 months later, from December 5th to February 5th, we're breaking out of that fearful zone. Another thing I wanted to look at is our funding rates. And funding rates, which I'm using this new program that it's not as easy to pull all this data up, but here it is. Funding rates are are they getting slightly positive? We're still slightly negative, right? And we've been negative for almost 3 weeks straight after almost a 20% move off of the lows. So what does that mean? Even though prices are up, you're still getting paid to hold your long positions. And that's nice for me, because I've been long since I called it out on the, on this weekly move here we were talking about. And if you've been watching the channel over the past few weeks, we said as soon as Bitcoin got a tick above that week's high, we were looking at a move up to the 9 exponential. And I'm going to get this fib retracement off so we can go ahead and take a look at that. So we said, yeah, as soon as we got a move over here, we were expecting a move up to that 9 exponential. And yes, we got that move, and, might be a profit taking area. Anyways, what else I want to throw on there right now? And here's another thing that's very, very important is our momentum indicator called the stochastics. Okay. And I'm going to pull up the CME chart, and the symbol there is BTC1 exclamation. And that is the Bitcoin CME futures chart, which Why do we follow this one, especially on Mondays? For some reason, it is just the most valid chart. And Bitcoin futures market, this is where all the pros trade. This is where the big money trades. This is where the guys that move the market are trading. And we had a full correction down below the critical zone, below the bearish critical zone right here. And why do I bring this up? We've had some major bounces from this area in the past. And again, this is referencing the CME data right here. And what you'll see here is when we get a shift in momentum, when these Stokes cross up, and we haven't officially crossed yet because the week does not close until Friday. But this will cross up this Friday on closure with any kind of a closure above 36,000. And I would say that is very, very likely given that we're a good $6,000 above that level right now, right? We are $6,000 above 36,000. We're at almost 44, so almost $7,000 above. And looking back at the past few times that this thing is crossed up on the weekly time frame, well, we got this cross up here, right? This was on July 12th or July 19th, whatever you want to call it, right back here. And what did that produce? Well, I'll measure it out for you. July 19th to the highs here, that was a 137% move. And the next one, and it's really easy to just go ahead and look at this Stoke cross indicator, right? And I personally put out a TradingView video. You can set up TradingView just like I have it set up here and follow along. Just follow the instructions on the video. It's really simple. But this one coming back, call it December 16 or December 23rd right there. And actually, excuse me, that's November 18th, right? That's when the cross came from that low critical level there. And we produced a move, which was 61%. And then you got February 11th, all the way back here, February 11th, right here, February 4th, whatever you want to call it. Close enough is close enough. That is the great old saying here. And that was a 346% gainer. Okay, what else do we have going on here on the weekly time frame for the CMEs is it is something called phantom hidden bullish divergence. Okay, and these are very, very, and this has to do with the RSI here. So when the RSI is producing lower lows, okay, however, the price action is producing higher lows, that, and I would call this regular hidden bullish divergence. Anyways, these have a very, very good hit rate and really not as good as really, really good hit rate. And why is this relevant? Well, I don't necessarily look at this as confirmed. Actually, I would confirm it with this last weekly closure here, taking out this high, confirmed. The next target, you know, the first target is going to be that yellow 21 right here at, call it 44,000, right? And then your second target, the full target on this move is going to be right here at 52,000. So this target at 40, call it 46.5, has a higher hit rate. And if we look at the 5-day chart, so why do we look at the different time frames? The higher term the time frame, the higher the time frame, the more powerful the signal is. No, I'm not accepting any calls right now, and I'm turning the volume down. Okay. No longer. No more calls. All right. And my assistant's out today, so not going to be the greatest, fanciest video, but hopefully this is helpful. And go ahead, like the video. Again, if you are getting anything out of this, don't forget to hit the like button so we can share this information with even more people. So back on to the 5-day. And this is something we called out just over the past few weeks. The 5-day Stokes, again, our momentum indicator, not on CMEs, on spot price action. Okay, what's the difference between CMEs and spot? Well, one is the futures market. One is the spot market. The futures market only trades from, gosh, what is it? It's Sunday at 3 p.m. to Friday at 3 p.m. I'm using round numbers. You can go look it up. I don't know if it's Eastern time or Western time. I believe it is actually Pacific time. I go off Pacific time because I'm out here on the West Coast, where, as you know, in California, these crazy mandates are absolutely ridiculous. And, you know, there's other people out in Florida and other states, right, where they just walk around and, you know, are having a little bit more of a normal life. Our poor kids out there. Anyways, back onto Bitcoin. So 5-day Stokes. We've only gotten down to this level 4 times in Bitcoin's history, this low level, this reset level. And we've been talking about this the past few weeks. Keep in mind, 5-day signals take, you know, 5 to 15 days to play out. And that's why, hey, we're you know, we got the signal back here on the 30th. And now we're just playing out here towards the 7th. Some would argue it's already been playing out. But anyways, 3 out of 4 times in Bitcoin's history, this signal has produced macro cycle lows, and we can go back and look. And right now, this is the 5th one, right? But if you go back, and I use this chart, BLX, the longest standing history for Bitcoin's price action. It's really simple to follow, but you can go back here and back test it yourself. But December 12th, 2018 was right here. We got the cross up from this low level. And what happened to Bitcoin's price on December 12th? We ran from, well, that was just the beginning of the rally. December 12th, 2018, not 2019, back here. I wouldn't count that because it didn't get to the low level. So where is the low level that we're talking about? Where is the relevance here, right? We want to see this somewhere around this 0.8, you know, 8.92. I'll just put a horizontal there so we can see it for the rest of them, okay? So only 4 other times in history, right? 1, 2, 3, 4 times that it's gotten this low and crossed back up to the upside. And December 12th, 2018, that was right here. And Bitcoin's price bounced off that level from 3,100. And what did it do? Over time, Bitcoin went from 3,100 to $61,000. I'd say that was a pretty big move, okay? Let's go see what happened the other time that we bounced off of that level. Back here. And that was January 6th, 2015. And what do you know? January 6th, 2015. By the way, sometimes it takes like 6 months to a year for this, you know, really to get going. But that was a move from, call it $170 to $20,000. A 13,000% gainer, not bad. Okay, now let's go back a little farther. October 18th, 2011. What happened October 18th, 2011? Oh boy, we all wish we were back here and buying some Bitcoin, right? Why? Well, we already know. We already know. Just do the math. Bitcoin goes from $2.50 or 30 cents, or whatever you want to call it, to $1,200. Are you kidding me? 14,000% gainer. Not bad. Okay. Now, I will point out the one other time where we had a bit of a bull trap, which we are, you know, we could be working on right now. What's a bull trap? When the bulls all get excited and think we're going to the moon, and then the bears dump it in their face. That is how you get wrecked, by not being aware of what is going on in the market and just thinking, oh, I'll just sleep on it and forget about it. October 3rd, 2014. Where was that? Okay. Oh, there it is right there. There she is. This was the bull trap. But with this cross, we still, this is right here, October 3rd, 2014. We still went from $280 to $469. That was a 63% rally. Not bad. Not bad. So what I would say, guys, is this is a very, very good signal. A very good signal. Something you want to be watching. You want to be aware of. You don't want to be a blind goose that doesn't even know what's going on. Okay? Be aware of where the momentum is going and how it is shifting. So enough for my longer term time frame analysis rant, and let's get on to our shorter term time frames, which some people might be a little bit more interested in. And here we go. So I'm going to put it on an hourly time frame, and this is what I would say on an hourly. Let's look at Coinbase. Did I have this one marked up? No. Okay. So really, what do we have here? I'm going to draw it out. Bitcoin making higher highs and higher lows on the hourly time frame. And I would say any kind of an hourly closure back below 42,300 will give you a move down to this guy right here at 41,250. Okay, that was kind of our last bottom side breakout of the range. And any kind of a closure below 41,000, call it 41,300, I am looking for a move down to 39,876, the purple 200 right there. Okay, and we could even come as low as this guy right here at 39,000 and still be in a macro uptrend. Not a macro uptrend, but a medium-term time frame uptrend. Okay, and so that would be totally fine. Don't get scared out of the market with that that kind of a move, and that could be just a wick down there, right? But we don't want to see. Here's where we want to kind of adjust our perception on time frames and look at the daily, right? The daily is a much more powerful time frame than an hourly. Hourly is just going to get you short-term intraday moves. Can be an indicator of what's, things to come, but basically, if you go back onto the hourly, and we are getting a bit of a backfill right now, as we did just hit the target at 44,000. Very nice. Very, very nice. And that's, why is it pulling? I'm willing to bet volatility is not maxed out yet. So I am looking at this as a, just kind of a short-term pullback, but yep. And Stokes are still crossed up, but not, it looks like they're could be crossing down. And then RSI, do we have any bearish divergence going on here? So that is when, let's see here. Price is making higher highs, but RSI is making lower highs. So yes, price is making higher highs all the way from here, from this point right here. We're getting higher highs in price, but lower highs in RSI. And we got 1, 2, 3 drives. So that could get you a move down, easily down to 42,666, that yellow 21. That would be completely fine in my opinion. All right. But again, back onto the medium-term time frames, where would the invalidation start to come? In other words, where would we start to look for that downside move? And let's get a clearer chart. And I would say this, any kind of a daily closure back below 40,000, right here, the yellow 21, I'll just move it right there. Any kind of a daily closure back below 40,000. And I'm going to look for a move back down minimum to 36. Probably, well, let's get on our fib tool here. What would be a bearish retracement on that guy? How would we do that? Yeah, so next move down to 37.8. If that breaks, retesting the lows of 34,000. Okay. And then let's look at some upside targets, right? What would the upside targets be? And we can use the fibs for the same reason there. So this is a consolidation right here, right? This high, this low, and we're about to break up. So breakout, any kind of a daily closure back above 44,000. Where's that level? 44,250 today. And here's what I would be looking for over the next few days, if not week, a move something like this, right? So first target, and we'll go wick to wick because this is a volatile market. So first target coming in between 50,100 and 52,000 right there. That would probably be your first sell, but ultimately I'd be looking for a move up towards this guy, the 2618, and that, that would be the kind of next target. But definitely I'd look for a major pullback in this region, okay? And possibly a pullback at the purple 200 if we can't break above this resistance level. And keep in mind, these moves don't just, happen overnight. Although they've been happening overnight over the past 3 days. Where's the volatility? So volatility is just beginning to tick up. We got Stokes, our momentum is up, and we got the RSI just entering. Well, typically when you've been away from the bullish control zone, the first test into that region is typically a sell for a short-term pullback, and that's what I'd be looking at right there. And we will have bearish divergence coming in. Yeah, we're going to have bearish divergence coming in from this point. If we can't get above 52,000 on this rally, then we will have bearish divergence. And, you're going to look for, like I said, probably a pullback. If we can break above this guy, this would be our breakout level at 44,300. We break above there and we get a move up to 50,000, and then we come back and retest 44. Okay. So again, what are we looking at on a weekly time frame, our most powerful time frame? And I'll just pull up spot price action. And I want to clear all these drawings off, so I'm just gonna take this guy and I'm gonna go like this. Get my eraser out here. And I just want to bring up a nice clear chart for you guys, so you can see how these things get drawn out and what we'd be looking at over the next few weeks or month, or a couple months, because the weekly plays. So again, we have our first lower low and kind of lower high on the weekly. And now the more that I look at this, I am putting this together. That was our first lower low, lower high, lower low. And where would we, and some would not call this a lower high, right? Some would say this is our first lower low, and then we're looking at a lower high. And the bull traps come in somewhere between the 0.5 and the 618, right? So if we show any kind of a weakness in this area between 50,500 and 54,000, and any kind of weakness right there, and then Bitcoin comes back. So we come up here to the 618, and then we come back down and we break below the 382. That would be official bull trap. And I'd say we come back and retest this blue box territory. I don't think it breaks on the first pass. Again, this will probably take some time, but ultimately I'd say over the next 3 to 6 months, we come and test the gap down on the CME charts, which, by the way, there is a nice professional gap here today. I don't know if I'd call that a professional gap, but there, yeah. That's typically what they call these, professional gap up. And you can see it more easily on the daily and even on the 4-hour, and more even easier to see it on the hourly. So we got this gap right here. And again, any kind of a daily hourly closure back below 42,380, I'd look for this gap to get filled, and that's totally completely fine. Otherwise, it might take a few weeks or months before we ever see that gap filled again. Because gaps like to get filled. They don't always get filled right away. Sometimes it takes months. Sometimes it takes years. And in this case, this gap is the one I'm talking about, between 23,500 and 26,000. So if we pull out a bull trap on the weekly time frame, that's where I'd be looking for ultimately over the next 3 to 6 months, if not year, for that to get filled. So that being said, what else did I want to bring up here? Again, on the weekly time frame, if price action does something like this, we were just looking at spot price. Let's look at CMEs. See, this does look, see that lower high right there is too shallow. That's not really a lower high. Oh, okay. So that does make more sense. And that is more in line with this being our first lower low, because that is not a lower high right there. See how we don't have a confirmed higher high there? We'd have to, yeah. Okay. So if we draw this out here using the fib again, wick to wick, where's the bull trappy zone? Between 50,000, or call it 51,000 and 55,000. Any kind of a weakness right there. Again, we come up here, 618, and we break below there. Bad, bad, bad. And look, I shouldn't say bad for me, because look, I'm a trader. I'm going to be laughing to the bank whether we go up or down from here. Not to say that, you know, I haven't had to take my lumps and lose a crap ton of money. You know, I've definitely been there and done that. But now, you know, I have a trading strategy. I've got a plan to minimize my risk, whether the market goes up or down. And I am super blessed to have that. And yeah, so, but here's the bull case, right? So if we put in a lower high right there, and then we put in a higher low here, and we come back and break above 52,000, that is the hopium. That's what we're looking. That's where I would be able, you know, be ready to call us macro bullish again. And again, this kind of price action is not happening today or tomorrow. These are major pivots on the market that I'm looking at. And well, timing the market is just, you know, it's foolishness if you ask me. But if these pivots, right, where these moves are sprung upon, they're a lot more tangible, right? It's a way to manage your risk based on your trading strategy. I don't know what that is for you. Hey, if you have a question about getting a trading strategy, post a comment in the thing below, and we'll follow up with you. But that's just my opinion. Anyways, last thing I wanted to point out here, last thing before we get on with our day, before we get on with another beautiful day in Bitcoin land, is this. What do we have here? Okay, so this is a nice long falling channel. And falling channels have a much higher falling channels have a much higher hit rate to break to the upside. And it's probably more easily seen on spot price action, but I will draw it out from here and then we'll go draw it on spot price. But you basically take the middle of the range here, which sometimes these drawing tools don't like me very much, but what do you know? What do you know? 52,000. Oh, 51,000 on CMEs. Let's see what it is on spot. Same thing. Falling channel. And, you know, remember 3 touches to a trend line. That is a trend. And the trend is your friend till the end of the trend. That is the great old saying. The trend is your friend till the end of the trend, right? So we got 1, 2, 3 touches to that trend line, and then we got multiple touches to the upside there. In fact, you might even draw it a little bit more like that. I don't know. I would draw it like that. Anyways, where does this move take us, right? So from the middle to the bottom, and we broke the trend line, and that's coming in, oh, at 54,000, which is right in line with the 618, right? The 618 fib. Again, I'll draw it out for you. So that is in perfect confluence with a major pullback target coming in at 53 or 54,000, somewhere in that range. Look, in technical analysis, this is not an exact science. There's no exact recipe. Okay, 2 + 2 does not equal 4. It's more like, you know, technical analysis. Again, it's not an exact science. It's more of an art, right? And there is a great old saying called "close enough is close enough." Take profits early and often, and yeah. So this has, you know, been a downtrend for the last month and a half, being resolved to the upside. I would expect a pullback from this region somewhere between 51 and 54,000. The big question is, do we get a lower high at the 382 at about 45,000? And the question is lower high or not. And if not, well, big problems for the bulls. And with that, guys, I think I'm going to leave this video off here. Have a blessed and wonderful day. Don't forget, like and subscribe. We're giving away a lot of free stuff at the end of this month. Post a comment. Have a great day. Take care.